Only mode.
Hello everybody, welcome to the Wave 59 introductory webinar. My name is Patrick Stiles. I'm a product manager with Wave 59. Before we get started, can we just have everybody type something into your chat box letting me know that you can hear me? Great, I see some people coming in. Great. Well, it seems like most people are online. If you have any difficulty, feel free to log out of the webinar and log back in. That should reconnect you to the audio and everything like that. Well, again, my name is Patrick Stiles. I'm a product manager with Wave 59. I've been with the firm for a little bit under a year and was recently asked to start taking over some of these introductory webinars that Eric Bean, our CEO and chief developer, has traditionally been doing. I was given the autonomy to go out and kind of pick my own topic of whatever I wanted to go after. And while there's a lot of different facets to Wave 59, one of the most overlooked topics, in my opinion, is the hive technology, which is basically artificial intelligence, similar to a neural net, but more advantageous than traditional neural nets for reasons that I'll get into. So a little bit about my background. I am a trader myself. I went through the different platforms from MetaTrader, checked out TradeStation, test drove NinjaTrader, and I had a perfect 45-degree equity curve. The only problem with that is that it was a negative equity curve. It was sloping downwards. And I realized that I wasn't even sure what the probability of my trades were without back testing, and that I really needed to find a system out there that was easy to use and was robust enough that I could put my strategies into it and at least figure out what their probabilities were, if they even held up on historical data, if I should know if I should continue that into the future. And even if I was going to be a discretionary trader, I would want to know that just so I would know, when to stay in a trade or when to fold them. So, through my own journey, I found my way to Wave 59, and obviously I fell into the fold of employment with the organization, and it's been fantastic. Obviously, for somebody that's a trading or trader enthusiast, it's been nothing short of a dream job, and I love every day of it. So it's been a lot of fun. And in getting to hives, I really wanted to talk about these because people call me all the time and ask what they should be using within Wave 59. And if you've been around for a little while and had a tech support question, you've probably interacted with me. I handle a good deal of the tech support tickets as well as the tech support calls. And I've also been in charge of some internal research here regarding a hive project of testing many different hives, many different indicators on many different markets and kind of sizing those up. So it's a natural extension for me to talk about this topic. But the people that call me up that are brand new to Wave 59 and they're asking what they should look at, there's a lot of different things to the program, from scaling charts, from time and price patterns to Astro to system building and an easy scripting language to a back testing. But there's also the hive technology. And for people that are new to Wave 59 or even new to trading in general, it's a good place to start because it's something that's easy to interface with, where it's relatively simple to put together a hive from a building standpoint, but yet what you get is something that's rather complex, that has a lot of complexity to it, that's a robust system, and as far as systems go, it's probably the easiest thing to take out of the box and really figure out what it sizes up at, and then deploy that onto the market. So as I already said, hives are basically artificial intelligence, and the big difference between them and neural nets, and both of those are in the Wave 59 program, is that neural nets can optimize on unseen data, meaning that they can know what's coming around the corner. They have a crystal ball, and they can optimize and curve fit themselves to basically the market conditions, and they can produce unbelievable exponential equity curves that are basically straight up flagpoles. And in reality, they're completely realistic or unrealistic, because when you put them onto a market that they haven't been optimized for, or just when they get new market conditions and data that they haven't seen before, e.g. the future of live trading, they fall apart. So that's a huge problem with neural nets, and there's programs out there that really attempt to overcome all of those problems. but the hives really kind of take care of it in one fell swoop. And the way that they do that is that they don't optimize on unseen data. They're able to make trades on the fly based on the underlying artificial intelligence mathematical theory and not know what's coming around the corner. So when you do a back test with the hive, which we'll get into here in a moment, the results that you see are as if you deployed that hive live and actually traded it on that market for that time frame under those exact conditions of this particular hive you have and the starting date and stuff like that, a few things that do affect it. But otherwise, you can kind of take those results and treat them as out of sample data compared to over-optimized curve-fitted data. So basically, what we're going to do here is go in and talk about building a hive, some basic questions that I get, some things that are easily overlooked or things that just aren't necessarily obvious to a first-time user. We're going to build a hive, and then from there, we're going to deploy it on some different markets and really kind of size up the different systems reports and really kind of slice and dice it from that angle. And then at the end, I'll save time for any of your guys' questions if you have any for me. So without further ado, let's get started with building a hive. And basically, this is the Wave 59 platform. Today I'm using Pro, which is my platform of choice, but the Hive technology is in EOD, it's in Pro, and it's definitely in private. So from the platform here, I go up to Artificial Intelligence, Hive Technology, and Hive Designer, and here it is, the Hive Designer. Now, this is what I mean, that it's incredibly easy to build a hive, considering how complex they are, that it's really just kind of clicking and adding indicators. The hardest thing about this is knowing how to adjust the indicators, and then also knowing what the particular parameters are that you want to put into those indicators. So to get started, you would click here to add an indicator. And through our different research of testing, dozens of indicators on, many different markets, we have found that some that really hold true are the adaptive moving average, the ultra smooth momentum curve, and then also the smart money index. Now, we certainly haven't tested everything, and we would encourage anybody out there that's interested in hives to go out and test everything on many different markets and really kind of see what they come up with. But for today, we're going to be building some hives with adaptive moving averages and ultra smooth momentum and smart money index. So right here is the AMA, the adaptive moving average, which is a proprietary tool of Wave 59. It was developed by Eric Bean, our CEO. And basically, you click on the indicator, and the first thing that comes up is the parameters that you need to enter in here. Whenever you see price in Wave 59, what it's asking for is open, high, lower, close. And in this case, we know that we want to enter close. A shortcut is just C for close, or you can type out close all the way. So we can do that. Length doesn't matter as much because we're going to be optimizing this parameter in particular. But then we come to these other factors, and these are smoothing factors, which make the adaptive moving average smooth and more sensitive to the market that it's applied to. Now, for somebody that's just starting with Wave 59, they're definitely not going to know what a proprietary setting like factor 1, factor 2, and factor 3 is. So what I suggest that you do is actually, before you even get started building a hive, is that you would come out of here and apply that indicator to a chart. Just real simple. You can see all the different systems and things that I've built. You would come down here, choose the indicator, apply it to a chart, and the first thing that pops up here is the default settings. This is the easiest way without you having to call tech support or go onto the internet and dig through literature to try to find these numbers yourself. But just kind of, come in here, know that you want to build a hive with, say, the AMA and the USM. Then you would come in here and just jot down these numbers, and we have 0.5, 0.65, and 0.85. Now, a little caveat to these numbers is that you never want the factors on the adaptive moving average to be greater than 1, which is just kind of the way that the thing is built. And we'll get into that later when we start adjusting the parameters of the adaptive moving average for the hive. But basically, you could change these, but you would have to have your range size between 0 and 1, and you want to get as much bang for your buck than if you just did the length parameter. So that's just a little forecasting saying that when you do adjust indicators, you typically want to adjust the length parameter. So, and I just applied that to our chart right here. So, going back to the Hive Designer, Basically, come back here, do close, length, again, doesn't matter too much, 0.5, 0.65, 0.85, and then we're in. All right, so we have our parameter sets in. The next thing that we need to take care of is how do we want to optimize our hive? And basically, we have no adjustments, which is pretty boring. You typically wouldn't want to do that unless it was just a baseline where you had other indicators put in here that were going to be optimized, and then this was just one that was going to be a flat, 10-period, moving average or something like that that the hive would take into consideration when it's making its trades. Aside from that scenario, the majority of the time you're going to want to do either range-bounded or unbounded adjustments. And basically the way that I think of the difference between these two is that range-bounded is going to be your oscillators. It's going to be things that are bounded to the bottom of your screen typically, and they're going to be things that are bounded to a central tendency. Whether they oscillate between negative 100 and 100 or 0 and 100, they're bounded to a range and they can never really have a value that's outside of that range. So everything else would have any value that's possible on the chart from 0 to 120,000 if you're trading Berkshire, and that would include a moving average like the AMA because it can really be any value that price tends to go. It can follow it there and have that value as well. So we do. So we click on the unbounded adjustments, and here this is what I was talking about a moment ago, where it's going to ask us how do we want to optimize this hive. And basically, we can optimize any one of these, but the one that's going to give us the most value is optimizing the length, because there's a big difference between, say, a 5-period adaptive moving average and a 50-period adaptive moving average. And what a hive does, it doesn't just take what is the best parameter set out of that range that you give it, but it actually takes all of those indicators in that range according to the step size and applies it to a chart. And then it has all of those on the chart that are deriving their own values, and they're communicating with each other and then giving you basically the signals as an aggregate of all those different indicators together. And when you have more than one indicator on here, they're communicating with each other, and the hive knows really how to assess each one of those individually. What's really cool about this is that we all know that some moving averages out there are not that profitable. Every trading seminar that I've ever gone to, people talk about the 50 and the 200 as the classical system. It might have worked in the 1970s. I don't know. That was before I got into trading. But what the hive will do is if you give it a bad parameter set, like say like a 50 simple moving average, which traditionally is not profitable, is that it's going to fade that signal. It's going to ignore it, and in fact, it's going to do the opposite of it. So that is really cool when you don't even have to worry about what you're putting in here. If it's a bad signal, the hive's going to know that. And sometimes you can see a system, you do a system report, and it's just this disastrous plane crash of red equity, meaning that it's just losing money at a steep curve. Well, if you did the exact opposite, then you would make money in that fashion, just on a positive slope. And basically, that's what the hive would take into consideration. So we're going to adjust the length here. And basically, the things that you need to know here is that this can be any value that you want. However, you don't want to overdo it. You don't want to do 1 to 10,000 in steps of 1. Your computer would take hours to compile that. These things can be rather CPU intensive, as you'll find out when you start building them. Typically, I like to do 1 to 50 in steps of 2, and that still takes, when I have 2 to 3 indicators on here and basically 25 inputs, that still takes a minute or two for my computer to compile it. And I have a 6 gigs of RAM, a quad core, and a gig of a video card. So not a slow computer by any means. So that's what we're going to enter here. And again, that can be anything that you want. So we're done picking out all of our assessments for the AMA. We're going to add this input. And basically, we're back to step 1. Now we basically have 3 options. We can add another indicator, we can build the hive, or we can build and apply to the chart. We're going to go and add some more indicators here. And one that I already mentioned that is really interesting is the ultra smooth momentum. And under this menu, it's going to be UltraMom. So you click here, and again, it's going to ask you for the input parameters. This is another proprietary tool of Wave 59. And this right here, the smooth factor, is obviously something that's not intuitive. You're not going to know that off the top of your head in most situations. So you would want to go apply that to a chart and just double check what the default parameter set for that is. So for the price, again, we're going to do close, length, we can do 9, and then the smooth is 4. So we're going to add that. Now, in this situation, unlike before, we're going to do range bounded. After we choose range bounded over unbounded, everything else is the same. It asks which parameter set do we want to optimize, and we're going to do the length parameter, which I know is 9 because I just entered it on the previous screen. We're going to do 1 to 50 in steps of 2. We're going to click OK. So you can see how easy this is to add indicators into a chart, or I'm sorry, into a hive and really get this thing to be built. This is the extent of difficulty in building a hive. And we'll add one more for kicks, and one that we like is the Smart Money Index. This indicator is very cool. It tracks smart money as well as dumb money, and it's basically an oscillator at the bottom of the screen. And again, the beautiful thing about it and hives is that it has a signal for smart money as well as dumb money. You don't want to follow dumb money, but the hive will fade that if you do put it in here. The length, we'll put 12. Smooth is 2, and Prosin is true. And what Prosin means is true or false, and in this situation, it means, are we talking about smart money or are we talking about dumb money? Well, we're going to just go ahead and save it some time and do true for smart money. So that's what we do. Now we add the input. The final thing here is for this hive to be compiled. You click the build hive right here. It's going to ask us to name it. The one caveat to naming these is that they cannot have any spaces in them, and just a little bit of foresight from my own experience of building a lot of different systems is come up with a logical naming convention. I have a system on my computer that's named Bob, ! And I still don't know to this day what is in it. I could open up the code and look at it, but basically it makes the most sense to name these things that really kind of describe what they are, descriptive names. So a good example would be Hive, USM, AMA, and SMI for Smart Money Index. And then you click OK, and then that builds the hive. I'm not going to do that because it takes a few minutes for the computer to compile it, and I'll save us some time, and we can just hop into looking at the hives that are applied to charts in my background here. But basically what happens once you click OK is that a Q script, which is Wave59's proprietary programming language, a Q script editor pops up, and it creates the wrapper for the hive. So that's kind of cool. It shows you what's going on behind the scenes, but you don't have to do any of the heavy lifting yourself. So let's see how this hive in particular did on the E-mini. So I have a couple different charts here. Let me go ahead and kind of clean this up. All right. So this is the E-mini chart over the last 10 years. Now, why am I testing it on 10 years? Well, I mean, a lot of people out there say that more data is better than less data, and that may be true. If you're doing traditional systems testing, you probably want to do in-sample and out-of-sample data testing. However, with the hive, because of the nature of how it works, which I explained earlier, you don't actually need to do out-of-sample data. It's not really going to tell you anything more than what the original test did. And in fact, everything's out-of-sample, so it would just be out-of-sample and out-of-sample. So in Wave59, you can come up here to the systems report. And right here, if you have multiple systems on your chart, it's going to ask which ones you want to run a test for. They're going to be over here on the left. Since we only have one system applied to this chart, it's right here, and it's the webinar AMA USM SMI, which again is just pretty descriptive of what that hive is. It's identical to the one that we just began to build. And basically the only other thing is that it asks for our backtesting settings. Our dollars per point, 50. Initial account size, 0. This 0 really doesn't matter unless you want to find out what your return is from year to year. Otherwise, it doesn't really affect anything in there. Now, of course, if you had something where it had a position sizing algorithm in it, then that would potentially come into play. And also, as far as just system testing goes, if you want to find out how this hive would do if you traded 10 contracts instead of 1, the easiest way to get there is just to add a 0 to everything and change this to 125. This is the minimum price fluctuation, or dollars per point. But we'll just do apples to apples across markets here and do the $50 per point. All right, and we generate that report, and here we are. This is the Wave 59 systems report. Pretty straightforward. Looks like we made $88,000 just trading one contract at a time over 10 years. You know, 88,000 over 10 years is not spectacular, but of course with stops and position sizing and leverage, that could really kind of be cranked up if it is a good system to really kind of be, you know, applied to. Now, some things that are pretty traditional of hives, they tend to be mean reversion strategies, but just by the nature of how they work. So the accuracy of the systems tend to be right around 50%. So 50% wins, 50% losses within, you know, a couple points of that middle marker. And this one falls right within that range of 49% winners. And then it breaks it down, wins, losses, total trades, average win, average loss, and one of the most important things on this entire systems report page is the average trade. And this is win or loss every time we go into the market with this system. On average, how much do we make? And with this hive, it's $281. So it's not bad. And also then the win-loss ratio kind of tells you how these two numbers, the average win and the average loss, compare, you know, relative to each other. Largest win, largest loss is not terribly important unless you're taking into account like a drawdown scenario or something like that, and we have that information down here. So, and then basically another thing of note is gross profit and gross loss. These numbers here, I like to think of them as, you know, total revenue, and then this being net, you know, net profit from a business perspective. But basically, these two numbers combined or compared to each other really kind of show you how hard your system is working to get the results that it's getting. If it had to make $2 million to net, you know, $88,000, you know, that's cranking a lot of wheels to not make a lot of profit. So, you know, you want to see this number, you know, their ratio, which is actually right here, the profit factor. You want to see this as high as possible. Obviously, you have to see it over 1, otherwise you have a losing system. So max drawdown and all these numbers down here really, they reflect that initial account size. So they are not truly indicative of how this system performed, except for this one is that it suffered a nearly $25,000 loss. However, you know, the 1,900%, that's not what really happened. And we could go back and change our initial account size and really kind of play with these numbers. It's actually kind of akin to the same thing as playing with the leverage. It's just which side you want to increase, the amount that you're starting with or the amount that you're trading each time. Now, one of the most important things on an entire systems report, this is what Eric Bean says. I happen to agree with him for obvious reasons, but it's the equity curve. And this really kind of tells the story of the system. You can see, you know, how it started out, you know, its early days and stuff, and then, you know, to where it is today. One of the best things about this is that it's ending on a high note, that it's making higher highs. You can see in the beginning, this first couple year period here is just absolutely beautiful, where it's, you know, greater than 45 degrees and it's just sloping upward aggressively. With, you know, minimal fluctuations, there's not a lot of jagged edges here, which would be indicative of volatility. So, you know, just kind of eyeballing this, I would suspect that the Sharpe ratio, you know, through the majority of 2005 is going to be pretty high because the standard deviation is low. Now, and then kind of coming in here to the later years of the Bush terms, it begins to get choppy. You know, for whatever reason, the market conditions were changing and stuff like that. But, you know, it wasn't having serious drawdowns. It just did kind of have some sideways action there. And then, it, you know, really what the hive does is that it learns to new market conditions. So, you know, I would be interested to go back and look at a chart and really kind of see what the paradigm shift was at that time in the beginning of 2006. What was going on in the market? Was it getting more volatile? Was it getting more sideways, or, you know, was it beginning to trend or something like that? Because it, you know, this story right here from the system report is kind of telling us that in all likelihood the market conditions changed, and then, you know, it took a little bit of time for the hive to adapt to that, and then it started making new hives. And now we all know what happened in 2008, and this hive, you know, did get shocked by that, you know, change in market conditions. However, the best thing about it is that, yeah, it did, you know, suffer some serious losses. This is probably where that big drawdown came from. But right after that, it kind of got its act together. It realized what it was doing, and then it started, sloping upward. And it started sloping upward with a vengeance. It started going up just about as fast as it started going down. So that's reassuring onto itself. And then right around here, right around March of 2009, actually it looks like the market condition changed yet again, where we hit our bottom, we started sloping upwards and stuff, and then, the hive it took some time to adapt to that, and now we've all been in interesting markets for the last, couple years, and that's kind of what's going on right there. So this is not a perfect equity curve, but it's a very good one, especially for just kind of starting out with throwing a couple indicators into a hive and not adding anything like stop losses or position sizing. So for starters, it looks good. It definitely has an upward slant, and in fact, if you can connect it this low down here, which is a little bit of initial red, to this low, that at like a trend line, the slope of that line would probably be right around 45 degrees, just kind of eyeballing it. That's what it looks like to me. So, and that's really kind of what you're looking for. So that looks decent. Now, of course, there's other markets and there's other types of hives out there, and a few that I want to take a look at. One in particular is crude oil, mainly because it is so dramatically different from the E-mini market. When you think about it, the E-mini is really just a proxy for the S&P 500 index. You just throw in some leverage, and it's basically the same thing. And of course, you have contract expiration. But what that means is that the underlying market of the E-mini is an aggregate equity index market, where basically it's a weighted average of 500 stocks that determine the final price. So if one stock has a bad day, it doesn't mean that the index has a bad day, and it doesn't mean that the E-mini has a bad day. So it's interesting to see how it would compare to oil, because oil obviously is a scarce resource that has a lot of different market dynamics and economic news that affect it, and can give it price shocks, unlike a index of anything, especially an aggregate equity one. So here we have a chart of oil going back 10 years, just like the last one. And we have the same hive. You can see the name right up here. We have the same hive applied to this chart, and we'll do a systems report. Our initial account settings are already set up, so we'll just run with this. All right. Now, on first look, this doesn't look too bad. $62,000 compared to $88,000. Okay, well, that's decent. However, some things that immediately jump out to me, the average trade is about $100 less from, and dropping from 280 to 180 is about a third being shaved off the top right there. But then also this profit factor is much lower. This hive on this market is working much harder to get to 62,000 than our hive on the E-mini. So that's always interesting. Now, of course, the proof is in the pudding, and we want to find out the story of what this system really did. So we want to go to the equity curve. And this is terrible. So this is basically what you're not looking for in a system. I've definitely seen a lot worse. I've seen some that are just straight down. But this one is just extremely volatile. It does slightly have some upward kind of sloping nature to it, but overall it's pretty ugly. One thing, though, that this does a good job of kind of demonstrating, unlike our E-mini chart a minute ago, that really just kind of demonstrated the market, and it seems like it just started making money from day one, is that hives have a training set. They, as I've said several times already on this, is that they are complex mathematical formulas that go into these things and derive their trades. So basically, and there's no stored memory within the actual hive itself. So you can apply a hive to any one market, and it's not going to be tainted because it was originally applied to another and it learned off of that other data. It's not the optimizing and the learning, it does not happen within the actual coding of the hive. It all happens once you apply it to a chart and once it goes live, and it really just has all those different input parameters, anywhere, in this case, somewhere around the neighborhood of 50 input parameters, and they're all communicating with each other and kind of coming up with the best trades that they're doing. So traditionally, you can see most hives have a training period for anywhere from 1 to 2 years where they don't do that well. They oftentimes lose money or stay kind of flat, and a lot of the hives that I've tested and looked at the equity curves of, they really just kind of bumble along there for the first little bit, and then they come into their own. And good ones, well, it's okay if good ones do that, but then they start having that nice, smooth 45-degree upward sloping equity curve. So that's always interesting. But that's something not to be freaked out about with hives. So basically, some other hives that have been applied to this. This is basically the E-mini over 10 years with the hive that is nothing other than the AMA with a step sizes of 1 to 50 and steps of 2. So we can go and see how this one performed. Everything else the same. All right. And this one has a total profit of $23,000. Obviously a lot less than that $88,000. Everything else, the profit factor is definitely a lot lower. In fact, this is worse than our oil hive, which is kind of interesting. So nothing really terribly spectacular here. The equity curve is kind of ugly. Here's that training set that I was just talking about where it kind of came into its own over like a 2-year period. And then it started to do some action, but it was affected a lot more by that market change in 2006 that also affected the same or the other hive that we had a moment ago. And that makes a lot of sense because it's the same market. It's the E-mini, and that hive has an AMA in it. This one is nothing other than the AMA. So you can kind of see how putting multiple indicators into a hive can make it more robust, where it's really kind of going to bounce back from that action a bit more. So it had a harder time in the 2006, 2007 time period. 2008 started to really kind of climb again, and then it was obviously kind of shooken up by the market volatility that came into play at that time. And then it really hasn't really bounced back from that. It hasn't totally cratered, but it's still kind of having a rough time. So that's what this hive looks like. And now a hive with just the USM, which is the ultra smooth momentum, and the adaptive moving average is on this chart. Again, 10 years of data. All right. All right, now this hive looks better already just right off the bat because of the total profit. It's over twice as much as the last hive, so it does kind of show that one indicator of the ultra smooth momentum really does kind of make a difference. And here, let me move this down to make sure you guys can see this. Okay. So total profit of $47,000. Everything else kind of looks in line with a lot of the other hives that we've looked at. The accuracy is right around 50-50. This one, I believe, didn't take note completely of what the other total trades are, but this one has quite a few trades, 500, almost 50 a year, which is about 1 week. Now, if you're making, $100 a week, I certainly can think of a lot of places to go below $100 every week on, but still, kind of looking for a little bit better performance in the total profit and especially in the profit factor. So, yeah. The equity curve, again, we have a training set. This one actually seems a little bit deeper and longer than the last ones, and then it really kind of comes into its own. It's 2006 time period, and you can kind of see that this is quite a bit more jagged than all the other ones that we've looked at so far. But 2006 time period here, it does kind of start to slope down a little bit, and then it jumps up, and it shows that this one is a bit more resilient against that change in market. Of course, I don't know a system out there that didn't have an interesting time with the 2008 market volatility. If it did, it was probably designed specifically for that market, meaning that it is losing money 99% of the rest of the time and everything. But even this hive bounced back and started to make new highs. So this one is still kind of ugly, still has a lot of room to go on, but it's an improvement, and that's really just kind of what I'm trying to demonstrate, is that the different hives with different indicators in them produce different results, and the more that you have traditionally, the more robust that it's going to have, or that it's going to be. What we have found through our own testing is that traditionally hives perform the very best when they have anywhere from 20 to 40, maybe up to 60 inputs. And what that would be is in those step sizes that we set, if you have a range of 1 to 10 as far as the smallest value that you're optimizing the length for, and the highest value of 10, and in steps of 1, that would be inputs of 10. So you could have, several indicators with that range and that step size of input parameters on it, and it would still perform well. But it kind of is like the opposite end of economies of scale, where things kind of get overcrowded and cluttered, where if you have too many inputs on there, it can certainly reduce some of its performance. So, but traditionally, keep it around a couple of indicators and maybe 20 inputs for each one, and you traditionally see decent results. And of course, like I've demonstrated here, different indicators produce different results, and different markets have different results from hives. And it really kind of comes down to the fact that they have different characteristics and everything like that, especially from market to market. So if I was building a hive and I really wanted to see how it would do on the E-mini, and I wanted some type of reassurance that it was going to do okay on other markets, then I would test it on the Dow and maybe the Russell and maybe the NASDAQ, but just markets that are similar in its makeup to what that market is. I wouldn't necessarily go, try to design a hive that's going to work on the E-mini, the wheat, oil, and gold or something like that. So, and what's also interesting is that since the hives have artificial intelligence and that training set, they don't necessarily perform the same when they're applied to the same market with different starting dates, and that just comes down to the training set. Now, right here, we have the E-mini over a 2-year period. So just going back to late 2008. All right, and here we are. And then we'll go back here to our 10 years of data on our original E-mini chart right here. And actually, now let me close all these other windows. Alrighty. Okay. Now you can see that these hives are rather similar, especially if you look at the signal line right here, where, and this signal line is what the hive produces. It is the aggregate output of all the different indicators that we put into the system. And basically, when it's above the line, it buys. When it belows, when it's below, it sells. And you can see that these lines look similar in nature, which is good because it's the same hive, just with different starting dates. But when you come in here, like right here, this trade on the 2-year chart, which is the bottom one of the two, got the signal about a day before the other one. You can see right there. Over here, this one actually, and then the 2-year got a little bit of whipsawed in here and everything like that. So the trades don't necessarily line up exactly between the different markets. So how do you overcome that? Well, if you're going to trade a hive and you've tested it on a certain market with a certain starting date, when you take that hive live, you would just put it to a chart that has the same starting date, and it's going to have that same training set. Now, if we change the starting date on these two charts with the same hives to have the same starting date, well, then we're going to have the same exact trades. So that is consistent from hive to hive. Nothing to be alarmed about on that. Now, you can see that, like on this one right here, this one buys, the market starts tanking, it doesn't do anything about it. Now, it does wait for a rebound, and then it sells, and then it buys this dip down there, so that looks good. But really what hives require are a good deal of faith. And I was skeptical at first when I first saw them. It was quite a bit different than a lot of the other things that I'd seen in my background of different markets and things like that. But after seeing just many different hives and seeing how they perform, it's amazing to see how many are consistent winners, at least when they are good hives to begin with and they have good equity curves and everything like that. I also track a hive, which is basically a pretty basic hive for the Dow, and if we were to trade it, we would put it on the YM, and I post the results on Facebook and stuff like that. And I've been monitoring that system for several months now, probably close to 6 months, and it seems like it's it's consistently winning, even though it has had some losses and stuff. On average, it's making money, and that's just a hive that's really kind of built to return 25% on that market from year to year. So what I would suggest for somebody that wants to build hives though, and to get that faith and to really kind of trust them, is to build many different hives and to really kind of go out there and see what all the different indicators do and how they perform on different markets. And then, once you find out individually what good indicators are, then start combining them. I've saved you some of that work by, pointing you in the direction of the AMA, the USM, and the SMI. But, we certainly haven't tested everything. I would encourage you guys to go out there and try anything that really kind of comes to mind. But those are definitely good ones to start with. But I would individually test those indicators within hives. I would apply them to a basket of different markets, and then I would record those results, and I would actually create a pretty complex spreadsheet where it has everything from net profit to accuracy, its numbers of trades, its average wins, average loss, average trade, largest win, largest loss, obviously its profit factor, its drawdown data, and stuff like that. And I would even kind of include a subjective line in there for what does its equity curve look like. It would be nice to know, its exact slope or something like that. So, but just kind of eyeballing it, like the equity curve looks good. The equity curve was a disaster. It looks like a Richter scale or something like that. Something like that. One more thing that I forgot to mention earlier is that when we're in here on the systems report, if you really want to slice and dice the performance of a system, and this is in development, it should be coming out soon. Can't give you any specific date on when it will be out, but we want to revamp our system report page right here so that it has stuff like Sharpe ratio and a lot of the other standard measures that you want to know when you're testing the system. But until that gets put in there, what you can do is come into the trade-by-trade results, which has from day one until today, and basically hold these down and highlight them. You can't right-click. I'm trying right now. Nothing happens. But on the PC, you can do Control-C. On the Mac, it might be Command-C. I'm not sure. But Control-C, and then go put that into an Excel spreadsheet. And then you can take the results right here, and you can start finding out things like their standard deviation. And from that, you can derive their Sharpe ratio and anything else that you really want to know. So this is capable for you to really kind of dive into the guts of the system as much as you want. So now, I've alluded to it a few times, but haven't really covered it, that it is possible to modify a hive. In fact, you can do anything you want to a hive. You can even go in there and reprogram the system if you want. The actual hive and the functions that are being called are open for you to look at. But what most people would want to do, instead of rewriting it, because that would kind of defeat the convenience of having a hive designer, but what they might want to do that the hive designer doesn't do is add position sizing and stop losses. How you would do that is that you would come right here to the QScript editor, and you would open this up, and you would come in here and come down to the hive that was made and just click it. This is the wrapper for the hive, meaning this isn't actually the guts of the system. If you want to see what actually is going on underneath the hood, well, I'll open a new window here. You would want to go to the function by the same name, and here it is. And this is the actual hive that I built for this webinar, and you can see right down here has the AMA unbounded and everything like that. It has all of its inputs and everything like that. So that's, if you really wanted, you can slice and dice that. However, that doesn't sound like a fun Sunday afternoon to me. But this is the wrapper of the system, and if you wanted to come in here and change things to it, you basically have your signal line, which is right here. This is generated by the Hive Designer, and then right in here you have something that I added that wouldn't traditionally be here, but this is an example of a stop loss. And basically, this is what it looks like, and it's practically like reading plain English. Basically, this is a variable that is assigned the entry price times the stop, and in this case, the stop is 1%, and then that creates the stop about or var, which is basically just a variable that I made up, and then then it would, if the system is long, and the low drops below the entry price minus the stop VAR, well, then we want to exit the long. We're going to have 0 contracts at the end of this exit. And then what price are we exiting at? Well, we want to get out at the entry price minus the stop VAR, which is going to be the price that we bought at minus 1%, so it's going to be 99% of our entry price. This is just one example of many different ways to do a stop loss, but just wanted to show how easy it is to put it into a Hive. You would compile this. I won't do that because it does take a while to compile because it has to call on all those functions that I showed a moment ago, which does take some time. But you would compile that, apply it to your chart, and you would then have a stop loss. Another thing that people do call me up and ask about is QScript. This is very, very easy. If you have any background in programming, you'll pick this up in no time at all. It's very similar to Easy Language. That's actually what I started out learning and smoothly made the transition to this. The biggest thing that helped me to learn this language was the QScript help file. And in here, I'm not sure if that popped up on my screen, but in the QScript help file, you have all the different functions that are available within QScript, and really from there, if you have an idea, you can go look up how to do it within the QScript help file, and then you just need to kind of duplicate that code, and it's pretty straightforward. So, yeah. All right, somebody wrote in that they can't see the QScript help file, but that's fine. It just has a list of the different functions that are available within the Wave59 scripting language, QScript. So in here, we've talked about how to build a Hive, what makes good Hives, how to test different Hives, how Hives perform on different markets, and also with different time start dates, as well as how they perform individually, with a variety of different indicators added to them, and how they can become robust with having enough indicators in there. We've extensively covered the system report of Wave59 and how to do back testing within this platform, and then we've even showed you how you would go about adding position sizing to a Hive, and actually that was stop losses, and position sizing would be of the very same nature. With that does it for my part of the presentation. But if anybody has questions, please feel free to type them into your chat box, and I will do my best to answer them. So I'll just give you guys a moment to type those in. All right. One of the questions is, can you build the worst Hive ever and trade opposite of it? Yeah, and in fact, the worst Hive ever would kind of be at the same time the best Hive ever, because the Hive would naturally take those inputs that you put into it. Like say you did the smart money index, and I'll just apply to the chart right here so you can see what it looks like in case you haven't before. And here it is. All right, and you can see that it's basically an oscillator, and blue is smart money, red is dumb money, and that is showing, like right here, dumb money's going short, and actually that's a fantastic signal. Earlier this year, right before our double dip. So if you had this track dumb money, the Hive would just say, hey, that's not a good move, and then it would go about trading the exact opposite of that. So, but yeah, you really don't have to worry about the inputs or the indicators that you put in there. Now, some indicators just don't perform well in Hives because of the nature of how they work, with Hives being mean reversion and also artificial intelligence. It also matters what market you put it on. But traditionally, we have found, and this kind of addresses somebody else's question here of what's the best Hive out there. We have found that the AMA, the USM, and the SMI make very good Hives. Beyond that, we probably will leave it upon you guys to go out there and test anything to your heart's delight. As you can see, it's quite straightforward to build a Hive. Compiling it does take a minute or two. and then to apply to a chart and stuff like that. But build a spreadsheet with all the different performance metrics that you can think of, and really some patterns begin to emerge as far as markets that consistently do well with hives, and then also indicators that consistently do well with hives. So. All right, another question is the Dow on sell 2 with the ES sell now. I'm not sure. I'd have to go back. That's actually posted on Facebook. I don't remember what the last trade was, but it did have one recently within the last week or two. So that actually brings up a good point. Please feel free to go to Facebook and search for Wave 59. Also, Eric Bean, our CEO, he is tweeting trade setups that he's seen throughout the day. Just kind of as he sees them. He's using a lot of geometric patterns in forecasting, and he's been calling a lot of shots as far as highs and lows from the day before it actually happens, and he's posting those on Twitter that get populated to our Facebook page. So I would encourage you guys to fan us on Facebook. We would love to have you there, and you can see us posting our results from our hive and also Eric's forecast. And then we also have a YouTube page which has 1 minute market forecast every day, basically with Eric kind of given a day's wrap-up of how yesterday's forecast went, and then how he sees things setting up for the following day. All right, just kind of going through some of these questions here, seeing if I didn't answer any of them. All right, here's a question. If I bought the software, how many computers can I put it on? You can install Wave 59 onto 4 computers. That's easy. Can you add indicators from the QScript library? That's a really good question. So hives, actually, when you add these indicators from the Hive Designer, you're actually adding their function. So if you got a indicator from the QScript library and it didn't come with a function that was basically the same thing, you would need to turn it into a function, which is not hard to do from a programming perspective, but it's just a few tweaks. And basically, instead of like plotting something, it just returns a value that's a function that then you call from another program. So it kind of goes a little bit beyond the scope of this introductory thing, but yes, it can be done. It might involve a little bit of tweaking, and if you need help doing it, we can help you do that. And another thing, before you get going on that, you can also go into the QScript editor and you can look at any of the functions that we have in our QScript already, and you can kind of see what they look like. They're pretty straightforward. In fact, you might even say that they're easier to build than an indicator. How many indicators can you put into a hive is a question. As many as you want. Of course, you are, one, going to have diminishing returns, kind of like I talked about, that economies at scale. At first, adding more, improves performance, but then on the back side, adding too many, like say you had 100 indicators with 100 inputs, one, it would take you forever to compile that, and that would be annoying. But other than that, you might experience diminishing returns. My own suggestion from experience would be to build a bunch of different hives and then keep adding indicators that you think are going to make sense, that you think are going to complement each other, especially as you've tested them individually, and then keep adding them until you kind of run into the problem that, hey, this is not helping, this is hurting, and then kind of take a step back and look at it from there. All right. All right, here's a question. This one's interesting. SMI kept you long, the bad March signal of the hive. Wouldn't it be better just to trade SMI versus a hive? SMI is just an indicator, and it's a algorithm that outputs a signal. And I mean, in many ways, I guess a hive is the same thing, but their complexity and their robustness is really nothing the same or comparable. It would be like, just comparing me working on my car out of my garage versus Jaguar or something like that. It's just it's not really apples to apples. Now, if you were interested in building a system around the SMI, that would make a lot of sense. At Wave 59, we encourage people to use at least 2 to 3 indicators. One indicator typically doesn't work by itself. ever. So even just some price or chart rating goes a long way with indicators. But if you wanted to test the SMI, the code is open. You could call it into a system, and you could back test the results, and that would actually be a much more accurate, holistic view on the hive, like this hive in particular, which is not the best hive ever. It's just something that I put together real quick for this webinar, and really just to kind of give you guys an introductory to the world of hives instead of kind of showing you this is the best hive ever, this is what we spent months developing or anything like that, but just kind of to show you what the hive is about, and really something that you could go out and build this afternoon when you if you have the software. But I would backtest both and then compare them from that angle, and if they were both really great, then I would trade them both, and I would have a diversified portfolio of multiple systems and stuff like that. Okay, here's a question. Do hives only run on daily charts, or do they work intraday too? They work on any time frame available from Wave 59. Right now we go down to 1-minute bars. Tick data may be coming out in the future. Obviously that's a little bit more computative intensive than minute bars. But hives will work on anything that you put them on. Now, one thing to keep in mind is that hives, they trade a fair amount. Their mean reversion, their accuracy is typically around 50%. So as you drop down to the lower time frames, you really got to build a good hive to have it be good on intraday, because you're running up against slippage and commissions and spreads and things like that. But it can be done. We have one client in particular that builds a lot of hives, who's actually out of Chicago, and my understanding is that they have built a hive that has an average trade of $60 on hour bars. So if you think about that, hour bars trading a few times a day, $60, that's not bad. Close to $200 a day, that's $1,000 a week or something like that. So it can be done. It's just a different dynamic. Hives are easier to build on daily bars, so that's what I would say. Most systems are easier to build on daily bars. Eric calls good on tweets. I'm going to say yes. I'm not sure if I understand that question completely. Feel free to repost it. How do you find us on YouTube? Go to YouTube and type in Wave numeric 5 numeric 9, so Wave 59. We have a page set up there. It's really nice. We have several different videos that we've been doing. Definitely want you guys to check that out. And then Facebook, same thing. Go to Facebook, in the search bar, type in Wave 59, and it should pull us up. If you can't find us after that, feel free to shoot us an email at support@wave59, and I will get you all those links. So, all right. Got a lot of questions coming through here. I'll do my best to get to all of these. Okay. All right, here's a question. Would SMI work better than, say, a 10 simple MA moving average on monthly bars for ETFs? I would say so. I would say that SMI is one of our flagship indicators. It's one of our proprietary ones that we recommend to everybody. Just, hey, if you're signing up, even if you already know what you want to do with our software, check this out. Just like the hives, it's very cool, something that we suggest that you look at. MAs typically don't do that well anyway, so that's kind of an easy call. To give you a complete answer, though, personally I would want to do a back test and slice and dice everything. Can you build hives for equities or just futures? You can build them for anything you want. Currencies, futures, equities, etc. Okay. Why are hives better on daily bars? Mainly because you run into the number of trades that you're doing and then slippage and commissions. So say like a hive on hour bars could have an average trade of $40, but then you also have commissions and slippage that eat away at that. So that $40 is no longer $40, and you're trading more often. So it's much more of a factor where maybe before you had 400 to 500 trades over 10 years, maybe you're going to have that many over 1 year. So it's just that's really kind of any system that you that you run into. That's why all the high frequency funds, are members of the exchange, and they get extreme discounts on everything that they do. There's no way that somebody could be true high frequency, and when I say that, I mean trading in milliseconds, 60 times in a minute or something like that, and be a retail trader. That would be incredibly hard with the commissions and stuff that they're subjected to. All right. All right. All right, well that kind of does it for all of the on-topic questions. If you had anything in there was a lot of questions that came through. If I missed anything, feel free to email me. Yeah, I'll do my best to answer that. The best way to get a hold of me is at support@wave59. And if you want, I can also send you all the hives and all the different things that I displayed in this webinar today. So that does it. We're ending right on time. Thank you very much for joining us. I hope that you guys learned something and enjoyed the webinar. And again, if you have any other questions, feel free to contact us. And in the meantime, go look us up on Facebook and YouTube. All right. Take care.